This is why your supply and demand trading system is failing. Obviously, you've done everything right, yet your entries keep hitting stop losses back to back. Let me show you something. So recently, I and my community, we took a successful trade based on supply and demand. We hit all three targets, TP1, TP2, TP3 in a few hours, guys. So I promised them I was going to make a comprehensive video explaining how I came up with that setup, because I know a lot of you guys struggle with making good entries, having quality entries. So in this video, I'm going to do that. I'm going to explain step by step. So make sure you follow me while I do this. And if you are new here, my name is Forex the King. I am a day trader, I am a rapper, and I am a content creator. Please subscribe to this channel and also turn on your notification bell so that you always get every information I post here firsthand. Now let's get to the business of the day. So like I said, I was on a trade that prompted me to make this video. I promised my team I was going to make a video. I think I saved that chart somewhere, so I'm just going to look for it. We traded volatility 75 index, and remember, as a day trader, you could do this on any time frame, guys, any time frame. All right, so I'm gonna go straight to the particular setup that we took to be able to explain this video clearly. I wish there is a playback feature on the deriv.com trading view, but we don't have that, so we're just going to manage this. I'm going to just go back to the setup. This is it, and I'll explain how we came up with an entry. We entered around this axis, and then we rode all the way to the top. All right, so now trading supply and demand could be very simple. It is one of the easiest trading systems that I know, guys. It's one of the easiest trading systems that I know, right? It's very straightforward. So follow me while I guide you on how it is done. Now, like I said, we placed an entry. We took a buy around this zone, and then our stop loss was just around here, and we're able to achieve a 1 to 2, guys. You can see we were able to achieve a 1:2 successfully. Now, before I forge ahead, I get frequently asked questions like, how do I maximize my, how do I scale up my win rates, right? How do I scale up my win rates such that my losses are minimal, right? The answer is very simple, guys. You just simply trade less. Okay, trade less. The more times in the market, the more you tend to lose your money, and obviously if you trade less, you risk less, right? So that's the first important thing. Another thing is focus on only your A plus setups, right? If you trade less and you pay attention to only the setup that you know that it is legit, it is going to play out at the end of the day, you focus on only that. You don't trade every single pattern you see on the chart. You don't trade every single familiar move you see on the chart. You wait for that particular setup, and trust me, guys, that setup has to have rules that guide the analysis process, right? You have to have certain rules that you follow when you open your chart. First, the first thing you do, the second thing you do, till you get to the end of that trade. That is, you enter and you execute the trade and you exit successfully from that market. Sometimes it might not actually play out as you expect, but a lot of times, guys, if you follow your A plus setup, you only focus on trading your A plus setup, a lot of times you will win. And as for trading supply and demand as a day trader, you can do it from any time frame. This trade was taken from the 5 minutes time frame. Yeah, if I can remember vividly, this was a trade we took on 5 minutes time frame. Every setup, every analysis was done on this time frame. So for everyone who enjoys trading the lower time frames as a day trader, this system will give you sniper entries on your favorite time frame. But then again, do not forget the rules. Trade less if you want to reduce your chances of losing money to the market. Also, focus on your A plus setups. That means wait, right? Patience is important. It's okay to go days without trading, guys. It's okay to have 0 trading days. If you can achieve a 1:2, like we had in this market, I think we had like 3 take profit levels, but we were able to achieve a 1:2. You can see for yourself. So if you can wait patiently to have that setup that gives you confidence that your entries are going to deliver, then wait patiently, guys. It's important. Wait for that setup. Do not trade every single pattern, every single familiar move you see in the market. Now, one more thing. Every functional, every working strategy or trading system will always come with set rules that guide your analysis. All right. If you are trading and your analysis does not have several confirmations, several rules that you must follow religiously, then that strategy is most likely not going to give you good results. All right. So for my supply and demand trading, I'm going to explain the simple rules that I follow that guarantees me success, right? If I see all of this in the market, I am certain that my setup is going to play out. Well, sometimes the market will do its thing, but a lot of the time I will always win if I follow these simple rules. So what are these rules? Number one, we want to see the direction of the market. All right. We want to see and be able to identify the trend of the market. Every single strategy, as far as technical analysis is concerned, depends on market structure. All right. No matter what strategy you want to bring on, there is no way you will not have to tell the direction of the market before even doing anything else. So, number one rule is very important. You have to be able to see the direction of the market. And if you notice here in this market, we're looking at an uptrend. Price was constantly pushing to the upside, and we were able to identify the uptrend in this market. How do you tell that this is an uptrend? You want to see series of highs and lows and higher lows and higher highs and higher lows, right? That's it. So once you see that, you want to go to the next rule. All right. Remember, your number one rule is to identify the trend. After you've been able to identify the trend of the market, you want to wait for a break of structure. All right. So here you can see that the market was constantly printing the higher highs and higher lows. Now
this is the latest high. Okay, so the next thing you want to see is a break of structure. All right, let's say you enter this market at this point where price was just around here. So you want to see that the market goes back into that high and breaks that structure. If that happens, that brings you to the number 3 rule, which is having to wait for price to come to your point of interest. Okay, at that point you want to be able to identify your demand zone. That is, if you are looking at an uptrend, as in the case in this trade, we were in an uptrending market, so we're looking for a demand zone. Okay, how do you identify that? I'm going to explain. So clearly we've seen that price has broken this structure. There's a break of structure here. All right, so the next one I want to see is price coming back to our demand zone, and this here is our demand zone. I'm going to explain this on a live chart. This here happens to be our demand zone. So I want to see that price comes back into that zone. Price comes back to revisit that zone. Price has to tap on that zone and then has to show you sign that is beginning to go back up again. I think this is where most of you get it wrong. Alright, when price comes to your demand zone, you don't wait. You are not patient. You just jump into the market because price has come to your zone, and of course you have seen a clear direction, the uptrend. You have waited patiently for a break of structure, and now price has come to your POI. Price has come to your point of interest, and now you are just diving into the market without planning your entry. So that takes us to the number four rule on our list. Number 4 is how to actually enter and execute a good trade. I'll show you what I do. Now let's go to the, I think I'm gonna have to clear this out. I'll remove this so I can explain using the exact setup that we enter the trade from. Okay, so we have that. Now, having seen, please let me take this out, permit me. take this out. So having seen price, this was I think we met price around this level, right? We met price around this level, and then price went on to do this. All right, it went up to this level, created that structure, and then came back down, right? Having come back down, we have seen a trend. Number one rule is met. Number two is to wait for a break of structure, and that is what happened here. I wish this was the normal trading view so I can play back and it will be more clear. So this is where we had our break of structure. I'm going to take that out. So we had our break of structure here, and what happened next? We had to wait for price to come back into our zone. Now this is our demand zone. The last bearish candlestick before the movement, the impulsive movement or whatever movement that broke that structure, is where you want to mark out as a demand zone, right? Now you can see that there was this candle here
before the pullback that broke that structure. Now I need to state this: if you are in an uptrend and you're looking to buy, you're looking out for a break of structure to the upside. But if you are in a downtrend, you're looking to sell, you're looking out for break of structures to the downside. And in the case in this market, we were in an uptrend, obviously, so we're looking for a movement that will break this previous high. And remember that you have to work with the most recent structure, right? As at the time of the trade, this was the most recent high. So this, after price moved to this level and broke that high, we had this area. Let me take that up. We had this area as our demand zone. You can see this bearish candle here. I had to mark it from the, let me take this out and just do it again. So I just marked it from the wick, from the high down to the low, right? So that right there is where I identified as my demand zone. Okay, so the next thing, where is the list? Okay, let me bring this. I think I should increase the font size. I'll take that to 20 or 24. 24 is good. Okay, I hope you can all see that clearly. So the next thing on the list is for us to plan our entry. Okay, now you notice that price came back to my zone here. Price came to retest my point of interest, which is the number three on my list, number three item on my list of my rules. So after that, right, a lot of you guys will just jump into the market, and especially after seeing this rejection here, most of you will just jump into the market and start buying, right? That's my work. That's actually a standard way to enter the market. It's cool. It's legit. You can still make good entries with that. But what I like to do is what I'm going to show you in this video. I like to wait to make sure that the next candlestick closes bullish. This is me talking about a bullish trend, right? We are talking about a market that is trending upwards. We are looking to buy. We have seen series of higher highs and higher lows. That is, we've identified the market's direction, the trend. We've also seen a break of structure to the upside, I mean, and then we have also waited for price to come back to our point of interest, which is our demand zone in this case. And then the next thing is to wait for the next candlestick after the closing of that candlestick that we tested our point of interest, right? After that candlestick that came down to our demand zone, we want to see that the next candlestick is bullish. Okay, I want to see that it's bullish. If I have an engulfing candlestick, a bullish engulfing candlestick, perfect. But if I don't have that, I don't want to see that the next candlestick closes bullish. And you can see that the next one here, I'm going to have to take that to zoom that in so that you see it clearly. So you can see this closed bullish, I mean, but then you can see that there was a very huge rejection from the sellers from this level, right? That would have given me kind of shiver. That would have probably just made me feel like this market will not play out at the end of the day. But because I am confident in this setup, I am confident in this strategy, I still enter the market, right? Enter the market, and then boom, we made it all the way up to our TPs, right? We hit the first TP, the second TP, I think the third TP in this trade. So that's how simple it is to trade supply and demand. The last rule is to ensure that the next candlestick after the one that closes, sorry, after the one that we test your demand zone, you need to wait for the next one to close bullish. If it doesn't close bullish, please chill, just take your time, just wait for a bullish movement in the market, right? If that happens, wait for it to close, right? Make sure it closes bullish. If that happens, then of course it has to still be around your um your demand zone. Okay, it has to still be around the demand zone, and then make your entry. Next one on the list, the next item on the list after you've entered the trade, the next one is for you to exit the market, right? You want to plan your exits, want to plan your exits, and your exit has to be, let me show you guys something, right? You notice there was this high here. You pay attention to, even though you are working with the most recent high to make your entries, you are paying attention to the previous high, the most obvious high from the past, to base your exit at, right? Your stop loss will be below the level you entered in, below your demand zone here, below your demand zone here, while your take profit has to be somewhere before the previous high, the most obvious high, right? That's it. If you check, you would see that from our entry up to this level, we have at least a 1:2. If you don't have, well, some traders go with a 1:1. It's still very perfect. If you only trade your ideal, your A plus setups, and you get, even if it's the 1:1, trust me, you'll be good. All right, you'll be good. But if you don't see at least a 1:2, you should just avoid it, right? Just always make sure that you are working with this mindset. You are trying to ensure that all your risk management plan is intact, and you'll be afloat in the market. All right, I'll show you guys how this works for a bearish market. All right, this was just me trying to explain with the chart. I remember I told you that we were in this market, and then this is why I had to make this video. So I'm going to go ahead to show you guys how it is done. If you are in a bearish market, I'll show you how it works, so just pay attention. So we are still on the volatility 75 index chart. I'm just scrolling to see, perfect. All right, so I needed to go back to see where we can find a bit of a downtrend so I could explain how this works for a downtrend. So you can see here we have more of the lows right now. You can see price keeps printing the lower lows, right? So basically we spotted the direction of the market. We have checked the number one rule guiding our analysis, which is the trend. We spotted a downtrend. So what do we do next? We want to see a break of structure. All right, this time around we are in a bearish market, so we want to see a break of structure to the downside. So did that happen here? Let's see. I'm going to take this out. I'm going to take this out. I'm going to take all of this out. Sorry about that. So let's say we met the market at this level. So let's say the market printed this first low, printed a high, came back to print another low, and then we spotted the market at this level. All right, forget about this other side. Let's just assume that we spotted price at this region. Okay, the next thing you want to see is for this structure right here to be broken, right? So price went on to print a new high, and then eventually it came down to break that structure somewhere around this region. Let me show you guys. So price broke that structure around this region and gave us a break of structure here, which checks the second rule on our list. What do we do next? Now we've seen a break of structure to the downside. The next thing we want to see is price going back to our supply zone this time, right? In a downtrend, we are interested in a supply zone. Our point of interest is the supply region, not the demand region this time. So let's see if the market did that. You see, price went back up to this area. Where is even our supply zone? Let me mark that out first. So remember I said that in a bullish market, the last bearish candlestick before the move that breaks that zone is where you should mark as your demand zone. Now in a bearish market, the last bullish candlestick that you spot before price pulls down to break the previous low is our supply zone. Okay, so in this case we have it here. So basically this is where we should mark as our supply zone, because this right here was the last candlestick before the movement that broke this structure. Okay, so all of that area is our supply zone. Eventually price had come back to revisit that zone. Price comes back to retest that zone, which is the number 3 on our list. All right, number 3 rule on our list. So price having retested that low, that zone rather, we are waiting to see the closing of the next candlestick at that region. Okay, the closing happens to be a bearish engulfing candlestick. The next price closes bearish, and it even engulfs the previous candlestick, which is even perfect. Like I said earlier, if you see a bullish engulfing candlestick in an uptrend where you're looking to buy, perfect. In a downtrend, as in this case, this is a bearish engulfing candlestick, perfect. So this gives you a more solid setup. So for traders who would have maximized this opportunity after the closing of this candlestick, if you take your sell at that region, all right, you would have made a 1:2, right? Not slightly, okay. Let's say you entered around that region, you are almost getting a 1:2. You can see that clearly, which is very okay, right? Which is very okay. So your stop loss, your exit has to be before the previous low, right? You can see this was the low here. So you exit the market before the previous low point in the market, and your stop loss has to be above that supply region. All right, above that supply region. So anybody who would have entered this trade here would have made so much profit from that zone, from that entry down to this level. All right, before price eventually goes back to that area, you would have been out of the market with a lot of profit. All right, guys, so this is how to do it. If you need more information on this, you can join our free Telegram community. I'll be sharing more updates on there to show you guys how you can make good profit for yourself just by understanding how the market works. Join our free Telegram group. You'll see how well we are doing on that platform. If you are interested in knowing more about how this works, you can reach out to me. My WhatsApp number will be in the description box of this video. So do well to join us. Please don't fail to join our free Telegram group. The link will be in the description box of this video. You guys feel be proud to be in that platform. If you have any questions, you can drop them in the comment section. If you have any concerns, you have anything you want me to address, drop it in the comment section, and I'll be able to look it up and reach out to you, or even make a video to explain better for you guys. I'll see you guys in the next video.